Hey, this is Matt from InvestiQuant. Today is Thursday, December 3rd, 2020, and yesterday we saw another strong close in the markets. They've been rallying the past couple of weeks, and we've got multi-year highs printing in some of the markets, including the S&P. So this morning I figured we would take a look at what has happened following multi-year highs when you get a down gap, which is currently forming in 3 of the 4 instruments. The gap size is fairly small right now, but it is down at the time of this recording in 3 of the 4. So we will use a down gap following multi-year highs in this study we're about to run in all 4 instruments. So let me set it up. The setup is going to be based upon getting long at the open, which is 9:30 a.m. Eastern Time, exiting at the close, which is 4:15 p.m. Eastern Time. And like I said, at the time of this recording, we are trading down everywhere except the NASDAQ. NASDAQ's up just a touch, but I'm going to go ahead and click gap down here. And I'm using gap down, but it does make a difference on the pattern if we're gapping up or down for this. So if we get to the open and we end up pushing higher, you probably do want to come in here and take a look at it with a gap up, because that will change the results. But we are down, so I'm going to leave that there. And next, I'm going to go into the price patterns, and I'm going to grab this pattern day after a 5-year high close. So I'm going to add that. So that's a significant closing high. And then I'm going to hit view results. And here we go. So these are the results of going long at the open, which is 9:30 a.m. Eastern Time, exiting at the close, 4:15 p.m. Eastern Time. When you open lower than the prior day close, and the prior day close closed at a 5-year high. So a strong market closes up at highs. The next day, you are opening lower than the prior close. Historically, the S&P, 152 samples dating back to 2003. We've got the NASDAQ with 164 samples, the Dow 111, and the Russell 97 samples. And if we take a look at the win rates on these, we're seeing the S&P, 59% of these have closed above the open that day. The NASDAQ, 60%. The Dow, 57%, and the Russell 63%. So all of these have favorable win rates that are around 60%, give or take just a little bit. But historically, they have been a little bit more likely to close above the open on this day. And if we take a look at the average win, average loss, the average loss is larger than the average win in the S&P. That is also true in the NASDAQ. The average win, average loss is pretty similar in size for the Dow, and then the average loss is greater than the average win in the Russell. So all 4 of these have favored closing above the open. However, when they don't, they are more susceptible to larger moves on the downside. So hopefully you found that helpful. Good luck today, and we'll see you next time.